February. It's going to be very important for the country. We also have the fact that there are other things that are happening, such as inflation, such as the MPR rate that was increased and all of that. So the purpose of this webinar really is for us to understand what is happening in the broader macroeconomic sphere and have the understanding of how it affects us both as personal consumers and as to also understand how it affects the bank as well as the customers of the bank. So how do you position yourself? How do you align yourself? Understanding the greater macroeconomic environment that we are. So that is one very important thing that we expect to get from this webinar, and we really cannot wait to have you dish out the wealth of wisdom and economic insight that you have. So once again, you're welcome, Mr. Wahab. Thank you very much for joining us. You can proceed with your presentation now. Thank you.
Yep, sorry, Phoebe, the ground rules, and now we'll manage questions.
Oh, yes, please. As we proceed, if you have any questions, please drop it in the Q&A section. Yes, so drop any question you have, any comment, any contribution, just drop that. And intermittently, if the host feels they need to answer any question at that moment, he will, or at the end of the session, we'll then take all the questions together. But please let us feel free to make it very interactive. We can't wait to also hear the insights from the audience and whatnot. So thank you very much. It is a webinar, so all mics have been turned off, but if you want to speak, just drop something in the chat or in the Q&A. Also, as we proceed, we're also going to run a quick poll as we proceed well into the webinar. So we'd like to implore you to be on the watch out. Once the pop-up comes on your screen, please, we'd like you to also vote. There are some other housekeeping rules, but before the end of the webinar, we would also come in and also let you know how else it's going to flow. But yeah, thank you very much. We look forward to having a very insightful session.
Thank you so much, Phoebe. Thank you, Bank of Industry. I know that the bank has been doing incredible amount of work, in the country over the last couple of years. It's an honor to actually, sit, beside Bank of Industry to give a view of what Nigeria is going to look like in 2023. There's so much to unpack this morning. So what I'll just do is I'll just dive, straight into it. So it is not unusual for us to see one particular topic that drive macroeconomic discussion in any given year. Right, 2022, there was one major news that was the order of the day in 2022. But to put things in proper context for you, right? If you cast your mind back to 2017, 2018, the globe was talking about how macroeconomic collapse in Turkey, as well as in Argentina, was having ripple effects, across major EMs and global markets, right? By 2019, we started to talk about the negative impact of Donald Trump's trade war on global macroeconomic milieu, right? By 2020, 2021, we had entered the pandemic, the impact of which more or less drove almost all economic activity to a halt, right? 2022 was meant to be a recovery year, but what then happened is that inflationary story basically stole the headline in 2022. And it will be nice for you to think about the cause of the inflation in two ways, right? Number one is that you remember when we slide into COVID-19 pandemic in 2022, in 2020, most central banks of the world, what they basically do was that they were pushing massive amount of money into the system, and they target COVID-19 relief packages, right? I think by July 2020, and the US government has actually done up to $2 trillion in pushing massive amount of money into the system. So what that then happened is that by 2021, 2022, we started to see the impact of that huge amount of money that was being pushed into the system, it became, significantly inflationary. As you can see here, inflationary movement in 2022, 2021 actually began at this period, and it was more or less basically driven by that massive wave of dovish policy that was implemented during the pandemic. By 2022, an economic environment that is already vulnerable, became a lot more negative when Russia invaded Ukraine, and the impact of that just basically disrupted global supply chains. And you also remember that the impact of this was one of the key reasons why we saw crude oil price actually touching some of the highest level that we've not seen in decades, right? And that's basically because of the fact that Russia alone, supply about 15% of global crude oil, right? And so when most of the economies of the world were ostracizing Russia from activities, so the impact of that just meant that, crude oil markets became undersupplied. And so we started to see crude oil price actually, tracking higher. And then the negative impact of that was basically on, gas prices and other fuel prices across the globe. So by November 2022, we've seen US inflation actually topping over 8%, which is more or less the highest level that we've seen, since 1982. Right, and this problem is not just in the US alone. I mean, the UK, the Euro area, most emerging economies were more or less, they had to endure some of the worst energy crises that we've not seen in recent times. For instance, if we take the UK, UK inflation started January 2022 at 5.5%. By the end of 2022, we've seen inflation actually rising rapidly to about 10.7%, and this is actually the case across most of the global macros. And of course, for central bankers, I mean, they have to justify their big salaries, right? They have to do something. They have to do something to stem the tide of this rising inflation. And one of the key policies, as you would have guessed, right, is that policy rates across the globe were being raised aggressively. Bank of Mexico, the US actually started, and then they topped some of the sharpest pace of interest rates hike that we saw in 2022. Bank of Mexico did about 500 basis points. US Fed did about 425 basis points, right? So in 2023, all of these policies that most central bankers had implemented in 2022 would actually have an impact across macro environments, right, in 2023. So if you check around you right now, what you see is that inflation remain elevated. And also this aggressive policy rate hike that most of these central banks have done in 2022 would actually ensure that global macroeconomic environment will probably slide into recession this year before we start to see some sort of slight recovery by 2024. Beyond inflation, another key story that dominated 2022 was how the US dollar was appreciating rapidly. In case you hate the Naira, I think you have to learn how to give the Naira some sort of break, because it wasn't just the Naira that lost battle against the US dollar in 2022. Most currencies of the world actually saw hell as far as comparison with dollar is concerned, right? I mean, think about the euro, think about the yen in Japan, think about the pounds. They were all reeling, all losing huge amount of percentages against the dollars, right? And I mean, to understand why dollar moved this sharply, I mean, it's not really that difficult to internalize. You remember at the start, I mean, I was talking about how global central bankers were raising rate aggressively, and you remember that US alone in 2022 did up to 425 basis point rate hike. So the impact of that just basically means one thing: investment in the US became a lot more attractive compared to anywhere in the world. So you see massive amount of wave of portfolio flows, essentially pursuing the US dollar just basically to get some sort of nice and attractive return. So the impact of that was what basically fueled, dollar, power that we saw in 2022. So we've started to see, dollar moderating at the start of 2023. And the reason is very simple. The US Fed has actually communicated that, look, the pace of growth that they did for inflation in 2022 is actually going to slow down. But as far as we are concerned, I mean, we don't think that dollar is done yet. US government is still going to raise rates by about anywhere between 50 to 100 basis points before they slow down, towards the second half of the year. So by the time you see another policy rate hike, maybe in the first half of the year, you will start to see the dollar actually gaining a lot more, compared to, versus what we've seen, in 2022. So by the time the US Fed slow down their rate cuts, what we think is that most emerging economies or currencies would actually start to gain some ground against the US dollars. And I feel like if the Naira is actually ready, Naira should also, rack up some gains against the dollar. But I mean, we will discuss Naira at the later part of this presentation. But what we're saying here is that most of the currencies that had lost against the dollar will start to, gain some sort of ground against the dollar once the US Fed start to reduce the pace of rate hike that they've done since 2022. So in terms of domestic, what I've tried to do is to sort of try to avoid talking politics, right? And it's quite unusual. I mean, in a year that is quite imperative for Nigerians to talk politics, we have decided to be quiet. The reason is that irrespective of who President Muhammadu Buhari hand over power to by May this year, we think there are some key priorities that whoever comes into power would have to implement for us to start to see some sort of solid, sustainable economic growth in Nigeria, whether it is any of the 4 major contestants or if you like, the 5 major contestants, right? It doesn't matter who. But what is important to us is that these key policies that we've highlighted here, they are some of the low-hanging fruits that we think that, look, anyone who comes to power come May 2023 would have to, take as priority for them to deliver sustainable economic growth for Nigeria. The first is, I mean, you would agree with me, is to fix FX. In the last 5 years, the Naira has actually lost roughly around 38%. If you look at it from the parallel market angle, it has probably lost about 2 times of 38%, right? And we think that fixing FX is quite important for the government of the day to sort of attract FDI. I like FDI a lot. I mean, a lot of people always make emphasis on FPI, foreign portfolio investment. I mean, in investing community, we typically call it a hot money. Right, hot money is not really good. For instance, when a portfolio manager from the UK is coming down to invest in Nigeria in FPI, the money will probably leave Nigeria in about a year, and it won't leave just with the size of the money that it came to Nigeria with. It will leave Nigeria in addition to some interest that the money would have made. And I mean, long net, I mean, it's not really good for Nigeria's macro condition. So what we like to see is FDI. Foreign direct investments roughly today is about 10% of our total capital importation. And we think that we should be able to raise that towards, the 40 to 50% levels for us to see liquidity to return in the FX market. I mean, I can't overemphasize how important infrastructure is. Today, Nigeria's infrastructure is about infrastructure deficits about $3 trillion. Right, and I think FGN is also aware of this. I mean, last year, the CBN announced that they are launching InfraCore with a seed fund of $1 trillion, and the total size of the InfraCore is roughly 15 trillion. And we think that this is actually quite imperative for the next administration to implement this, for this project to kick off, so that, I mean, we can deliver on power, we can deliver on energy and every other infrastructure that businesses need to survive. The next, more or less important policy that the next administration needs to focus on really is to grow tax revenue. Last year, the federal portion of the tax revenue that was collected in 2022 came to about 6.4 trillion, which is quite ridiculously low, which it's roughly around 3.7% of GDP. And then when we compare that number to some emerging and frontier market, and we saw that this 6.4 trillion is about 44% lower than the average across the emerging and frontier markets. I mean, which is quite ridiculous, for the size of Nigeria's economy. All we know today is that only 28% of Nigeria's working population pay taxes, and we think a lot still needs to be done for FGN to raise tax revenue so that they are able to fund, infrastructure, critical infrastructure that I had previously discussed. I think the elephant in the room is obviously subsidy. Subsidy has to go. We have no choice this year. I like numbers, so let me put things in proper context. For the first half of 2023, the government has earmarked about 3.4 trillion to be used to fund subsidy. If you put that in context, right, this 3.4 trillion is roughly around 50% of our retained revenues in 2023. And this is just for the half year. Now imagine we funding subsidy for the rest of the year. It means up to 95% of federal government revenue is actually would go into funding subsidy, which I think at this point, it doesn't make any sense anymore. FGN has to, allow subsidy to go for us to free up capital or free up revenue to invest in infrastructure. The next is CBN's ways and means. This ways and means, this is what we call it in finance. But to make you better understand, ways and means is the overdraft that the CBN typically extend to the federal government to fund budgets. This is not illegal, but I think the FGN over the last couple of years had relied on this, overdrafts, and they are now breaking the CBN Act law. The Act says that, look, only 5% of the prior year retained revenue is the size of the amount that should be extended to the federal government to fund budget. And they've done more than that. The size of the balance sheet amount now is about 22 trillion. So what we're saying is that this CBN's overdraft to FGN over the last 5 to 6 years has given this present administration this sort of false sense of security that there's money somewhere that they can use to pay salaries, to fund infrastructure, which is quite not nice. Even if you're a business owner, and you're hired as a CEO, I think one of the first few things that you want to do is how do you grow revenue? A successive Nigerian government has been really quite nonchalant as far as growing revenue is concerned, because there is this money that they can take somewhere from the CBN, and this money is already overblowing the CBN's balance sheet. So what we're saying is that this year, this money has to be restructured and it needs to be added to our debt stock, which is currently not really transparent. The next is import substitution. In the last 5 years, our import bill in Nigeria has averaged roughly around $60 billion. And this 60 billion over the same period is about 39% more than FX reserves, right? I think FGN needs to put more or less a lot of policies in place for us to have, for us to reap significant amount of benefit from import substitution. We've recorded a lot of successes across, some sectors that I can like to mention, as cement, for instance. Once upon a time, cement in Nigeria, when you want to build houses or road construction, you import cement, bagged cement into this country about 20 years ago. So what the government of that day did was just that, look, we are banning importation of bagged cement, and we are going to be empowering domestic producers. And that's what they've done in the last 20 years. Today, Nigeria is actually self-sufficient. In fact, we can supply what we can consume in Nigeria and also export the balance. Again, I like a lot of numbers. Let me put it into proper context. Across the cement sector in Nigeria, we have altogether about 50 million metric tons of installed capacity. And our consumption of cement is roughly around 20 million metric tons. What that means is that we can more than double our domestic consumption, which means that if we can, at 100% utilization rate, which means that if we don't consume everything, we can obviously export the balance, right? We've seen success in cement. Imagine the cement that we consume today, we have to import it. This cement importation would also contribute to the significant amount of pressure that we're already seeing from the FX side of things. So a lot still needs to be done for us to reap the benefit of import substitution, especially from oil and gas and manufacturing space. Finally is asset privatization. Clearly, everybody would agree with me that FGN needs to let some assets go as far as oil is concerned. This is very important because we need to avoid the issue of stranded assets, because everyone today is talking about green energy, carbon emission. Before we get caught off guard, we need to privatize this sort of assets so that people who are competent locally would have the opportunity to take up those assets and also, turn them around. Refinery has to go. You have to agree with me on that. I was checking Port Harcourt Refinery financials for 2021, and what I saw was that in 2021 alone, Port Harcourt Refinery had actually made 0 revenues, and they made loss of about 49 billion naira in a year, right? This has to go. This has to, we must discontinue this, right? Beyond oil refinery, crude oil pipeline network, a lot of privatization needs to be done in this particular, sector. And finally, gas assets. We need to privatize gas assets so that, competent domestic, investors can take up those assets and obviously turn it around. I mean, Seplat is a good example as far as, the beneficiaries of privatization of Nigeria's, gas assets and oil assets is concerned. Now, so talking about the implication of all of these factors that I had mentioned for businesses and for government, it's actually quite easy to actually internalize, right? So first of all is that if you increase FDI, for instance, what you are doing is that you are creating opportunity for institutional investor, international investor and domestic businesses to create, solid value chain linkage between themselves. And I'll give you an example. Presco, for instance, Presco is a 50 billion naira revenue company. Is a combination of foreign direct investment and also domestic investor, right? Today, Presco is one of the key suppliers of crude palm oil that Nestle used to do used as an input for most of their production, right? Beyond Presco, you can think about Como as well. You can think about different businesses that actually a combination of international investment and also domestic investors, which over the course of the years, they've created this sort of nice, perfect value chain, among themselves that is helping us, deliver, solid economic growth as far as manufacturing is concerned and whatnot. They can also partner strategically. Labor mobility is actually also going to, be strong as far as foreign direct investment is concerned. When you think about infrastructure, again, infrastructure, you need infrastructure to survive as a country, for your businesses to survive as well. Think about power, think about energy, good road network, access to good road network will provide you solid access to markets. And also, infrastructure in technology would also help, domestic businesses to actually deliver results as far as, infrastructure is concerned. Taxes, maybe not necessarily, it won't necessarily benefit businesses, but from the government side of things, we're talking about infrastructure, which obviously I've already overflowed in the first few minutes of this presentation. About investing in critical infrastructure is actually very important. And one of the key ways to funding infrastructure is, via tax revenues. So a lot more of unregistered businesses and other informal businesses need to be brought into the tax net for us to grow tax revenue. The 6.4 billion naira, 6.4 trillion naira that FGN generated in taxes last year is actually 3 to 4 times lower than what South Africa alone, is generating. South Africa compared to Nigeria is a smaller economy, right? So again, you see the sense in that. The next is import substitution. I've given, excellent example of how import substitution is actually going to benefit domestic businesses. And what import substitution does is it helps reduce pressure, on foreign exchange demand, right? Again, like I said, nobody is demanding, forex to import cement anymore in the Nigerian market because we already have, self-sufficient as far as cement import is concerned. Subsidy has to go. I think the biggest short-term implication of subsidy is that for businesses, it's going to be costly. Cost of doing business is going to be a lot higher. And you will see in the next few slides when I discuss, inflation. But long-term, once you remove subsidy, what it does is it frees up revenues, for the government, and then the government have the opportunity to invest those revenue in infrastructure that would help, businesses deliver results. Privatization of assets. I mean, I've cited an example of a Seplat, for instance, a company who is now one of the major, companies as far as oil and gas industry is concerned, not just in Africa but across the globe. And now let's break it all down. This year, we think economic growth in Nigeria is going to range between 2.3% and 3.75%. FGN MTEF is actually forecasting 3.75%. I mean, they are usually one of the most optimistic as far as economic growth is concerned in Nigeria. Yeah. Bloomberg about 2.76%, and World Bank and IMF, anywhere between 2.9% and 3%. But what is probably a general consensus among all of these forecasters is that next year, all GDP is actually going to be the power that would drive Nigeria's growth in 2023, right? If you recall, in 2022, we had positive economic growth, but that growth would have been a lot more positive if we had not faced production challenges, right? By Q3 2022, Nigeria's oil production has dipped to 1.2%, which is one of the lowest in the history of Nigeria. In 2023, we think production is actually going to recover, and the impact of that would actually support economic growth. For the rest of the sectors, agri, manufacturing, services, trade, and construction, they are going to be remaining resilient, but most of the juice, as far as growth is concerned, is actually going to be coming from all GDP next year. In 2023 this year. Inflation is obviously a problem. Already we've seen inflation moderating in December by about 12 basis points. But if you had listened to the CBN governor, I mean, what you will see, I mean, one of the key takeaway from the last MPC meeting is that this decline in inflation, or this slower pace of inflationary growth, is actually not huge enough for us to celebrate. And I mean, the governor actually knew what he was saying, because in 2023, we still think that inflation would average roughly around 20.7%, which basically means that as an investor, you're investing in fixed income, you're investing in equities, or you're a business, you have to do a lot more than 20.7% for you to see positive real return as far as investor is concerned. For businesses, for you to grow margin, you have to raise prices by more than 2.7%. And to corroborate the view that inflation is still going to remain elevated at 20.7%, on a month-on-month basis, we're still seeing consumer prices actually running faster than 5 years average, right? And this also essentially is pointing towards the fact that, look, 2023 is actually not going to be a year of lower inflation. I'm sorry to break it to you. In simple explanation, inflation is actually going to roughly average 20.7%. However, that does not necessarily mean that this is the best inflation can do as far as uptrend is concerned. We think risk to inflation this year is actually to the upside rather than to the downside. And there are so many risks that could potentially drive inflation way beyond this 20.7%. I mean, you can think about electricity price hike potentially that is going to happen this year. Already we have FX challenges, and you know that FX, directly or indirectly contribute to Nigeria's inflationary growth. We've run the number many times. FX is actually key. In fact, FX contribute directly to the core basket and indirectly to the food basket. But among all of the key risks to inflation, what I've done here is to single out PMS price movement, because obviously that's at the core of discussion, whether it is for government or for Nigeria, as far as we are concerned today. And so this table is actually more or less a sensitivity analysis of where landing cost of petrol price could potentially be, using crude oil price as an input and also exchange rate as an input. So the worst case scenario is that this year, fuel price will probably touch 444 naira per liter, which means that if this should materialize, inflation will probably average anywhere between 22.59% to 24.47% on average this year. So when I say that as a business, for you to see margin growth this year. You have to raise price by 20.7%. Actually, no. If I would backpedal a little bit, you actually have to raise your price anywhere between 25 to 30% for you to see huge amount of massive margin growth, in 2023, right? For monetary policy, this year, last year has been incredibly tight as far as Nigerian financial system is concerned. Inflation has been running aggressively. I've shown you in the past how the inflation that we're seeing in Nigeria today, we're not alone, in case you are wondering. Ask our brothers living in the UK, or our brothers doing business in the UK or in the US or in Canada. Everybody is actually facing huge amount of pressure as far as prices is concerned. But compared to the US, Nigeria's inflation is actually growing about 2 to 3 times faster, right? So this is what, is more or less a cause of worry, for the CBN. And so the CBN, over the last, couple of months, they've been really, really, active. They've been raising rates, monetary policy rates significantly. I think in 2022, CBN did roughly 500 basis point rate hike in 2022 alone to about 16.5%. Earlier this week on Tuesday, they announced another 100 basis point rate hike. Rate is now at 17.5%. And, the implication for this is that, businesses potentially cannot borrow money for anywhere less than 17.5%. Of course, unless you're talking about a concessionary loan, right? So I think what the CBN is just trying to achieve here is that they are trying to discourage spending and encourage savings so that they are able to take out a lot of money, a lot of nairas out of the system. Because obviously, as far as they are concerned, too much naira is in the system, even though I don't have nairas, a lot in my bank account. But as far as the CBN is concerned, there are too much nairas in the system. So they need to raise rates to attract domestic investment so that people would put their money into the banking system so that CBN is able to take it out, and then from that, they are able to reduce how fast inflation is going. And beyond that, beyond raising rates, CBN has done quite a number of things. And I've cited like 2 to 3 examples. For instance, they've raised the negotiable minimum rates that the deposit money banks can charge on local currency deposits to about 30% of MPR. All those, their intervention loans too. Rates on intervention loan has been raised from 5% to 9%. I think the implication of all of this is just basically to ensure that they are able to bring down inflation. Because if you had invested in a 10-year bond in Nigeria, for instance, since July 2022, your real return would have been negative. And the real return actually started, the spread between inflation and 10-year bond actually started at around 3.9%. Around July 2020, now it's incredibly at 7.8%, about 780 basis point spread. So the CBN found it imperative for them to raise rate aggressively, right, to ensure that this huge amount of spread is actually being thinned out, right? And for me personally, I think more of this hawkish rendition, hawkish policy move is actually going to come in 2023. What that means is that if your business depends on loans to survive, loans to expand, it means that if you have to borrow money, now is actually the best time to borrow, because the rate you are seeing in the markets now is probably the best that you will see throughout the rest of the year. But we don't think that the CBN is actually going to continue aggressively to raise rates, right? I think the worry of the CBN is actually lies between January and April, right? All of these monies that I've highlighted here, they are monies that were paid into the system between January and April. The cumulative of this money is actually about 3.7 trillion naira. These are the monies that the government, both federal government and CBN, had borrowed in the past, to make it simple, right? And they have to pay them this year. For instance, in April alone, they have to pay into the system about 1.3 trillion into the system in April alone. And CBN, they don't like to see naira. So they have to mop up this liquidity to ensure that inflation, does not continue to, rise aggressively. So beyond this period, I think the CBN will now start to slow down on the pace of, the aggressiveness of their hawkish rendition between May and December. But that does not necessarily mean that they will cut rates this year. I think the fact that GDP is still positive would sort of give them, a good sense of comfort before they start to cut rates, right? Would give them comfort, right? For not, cutting rate, at least in 2023. And then beyond the fact that you have to borrow now, if you must borrow, you also should not be locking rate at this time towards 5-year, 10-year tenor. Again, if you have to borrow as well, you also need to do it preferably at a short window. So if you borrow today, borrow for 1 year, because obviously towards the end of December, we'll start to see a much more looser or softer monetary policy, environment, which basically means that rates will probably moderate. So if you had locked into a borrowing of about 30% right now, 40% again, and then you have to pay that over a 10-year period, that's actually not good for your balance sheet. Not everybody rate hike. Not everybody, especially business owners. I just paint a scenario of how 17.5% is now the new benchmark for borrowing as far as monetary policy is concerned. Not everybody likes it. And every time when I hear people criticizing the CBN raising rates, what they typically say is that, look, CBN is just raising rates. The implication is actually not being felt in the domestic market. And to be honest, if you think about it, it's actually quite true, to be honest, to some extent. Because if you go to the US, for instance, once the Fed raised rates by 25, 50 basis points, you see the impact immediately. Mortgage rates goes up almost immediately. Rates on floating borrowings goes up almost immediately. But the case is not the same in Nigeria. And I guess the CBN is also aware of this. And that's why in the last 12 months, CBN has been trying to devise means to ensure that they repair the monetary policy transmission mechanism such that when they do anything with MPR, the impact is felt, in the domestic market. And the impact has not been felt really in the domestic market because, come to think about it, 80% of the currency in circulation in Nigeria today is actually out of the banking system. So if you say you want to be mopping out liquidity and all of the liquidity that you are trying to mop out is actually not within the banking system, it's a problem, right? So the CBN is actually trying to solve this problem. That's why one of the best ways to do it is to bring in all of the Nairas and reissue new Nairas so that from the reissuance of new Naira, they can easily track all of the monies, both in the banking system and in the circulation. And I guess the CBN has also been seeing this problem. I plot the chart between January 2014 and 2022. What you see is that, look, on average, currency outside banks as a percentage of currency in circulation has actually been roughly around 81% on average in the last 10 years, right? So the CBN found it very imperative for them to introduce new Naira. Beyond the issue of monetary policy transmission mechanism, CBN also explained that, look, they are trying to reduce the issue of counterfeiting of the Naira because it's now becoming a lot easier for people to print fake Naira. And also, they also are trying to solve the kidnapping problem. I don't know how that will solve kidnapping problem. Anyways, also in the explanation of the CBN, in the defense of the CBN, they are saying that, look, most of the notes in the circulation now, they are not clean and they are unfit, right? I think because of the fact that the window that the CBN is trying to give to take in, the old Naira and print new Naira is actually too short. CBN gave around 100 days. And obviously, if you know anything about economics, rapid demonetization is actually very negative as far as, macroeconomic condition is concerned, especially for small businesses which rely on day-to-day cash transaction. The implication is actually quite terrible, right? And so one of the biggest implications that I was able to highlight is liquidity constraints, for businesses. So if you rely on cash, it becomes very hard for you to do businesses. So for you to survive this period of CBN, trying to control the transmission mechanism or trying to repair the transmission mechanism, one of the best things to do is to adopt, digital payments, right? I would actually argue that a lot of Nigerian businesses have actually been quite comfortable, quite nonchalant about adopting, digital payments. And the reason is very simple. When you buy anything anywhere in Nigeria, you ask them that, can I pay with your card? Can you make transfers? They will say no. What they want is cash, right? And I was in Kenya as far back as 2018. And when you go to Kenya, no matter how small what you want to buy is, those sellers, the sellers in the market, the women and the men in the market, they will tell you that, oh, my brother, they don't say my brother in Kenya, but they say, I don't take cash. Do you have Momo or do you have ATM to pay? So if a Kenya is able to embrace digitalization, I don't see any reason why Nigeria can't. So the story I'm just trying to paint here is that, look, for you to survive in this sort of environment, because CBN is actually not quite joking. I mean, we've seen Emefiele saying that, look, the window that they've given, they are not extending it. I've also seen, the president also more or less backing the CBN that, look, whatever you want to do, whatever cash you have, within 100 days, you should be able to bring it into the banking system and take a new Naira. So they are not extending it. So for you to survive as a business, you have to adopt, digitalization. Now, talking about digitalization, I guess the CBN is also putting a lot of, they are becoming a lot more bold as far as, speeding up Nigeria's financial inclusion is concerned. So what they've done is that they've introduced, withdrawal limits. Everybody is aware of this already. They've created national domestic card scheme. The withdrawal limits, of course, they made small adjustments in the last, couple of weeks. But maximum cash withdrawal for individual is now 500,000. For corporate is 5 million. Any kind of OTC check that is beyond 100K, it will not be honored. And in your ATM, you can only withdraw 20K per day, and you are subject to maximum withdrawal of 100K, right? 100,000 naira. Again, if you think that all of these policies, if you think they are harsh, then you probably are not seeing the need for financial inclusion. It's actually very, very important because, come to look at this table. CBN said they've put this policy in place since 2005, and they said by 2022, they want to embrace, or they want to onboard up to 70% of adult population into the digital payment system, right? But today, only about 45% of Nigeria's adults is actually using that digital platform. Savings is even much more lower. Only about 70% of Nigerian adults actually has pension, retirement savings account, right? I think it's quite ridiculous for the size of Nigeria's economy. Come to think about it, Nigeria actually has one of the highest rate of financially excluded adults across most of the African countries that have tracked, right? About 36% of Nigeria's adults are actually currently financially excluded, right? If you go to Kenya again, only 11% of adults is financially excluded. Rwanda, 7%, South Africa, 7%. These guys in East Africa and in South Africa, they've done a lot of job, incredible amount of job to embrace financial inclusion. And I see no reason why Nigeria should not do it. And guess what? Nigeria is actually in a very good position compared to South Africa to embrace, digitalization, right? We have the bedrock, to do it. And one of the biggest bedrock is mobile connections and penetration rates is actually one of the highest in Nigeria compared to any other, African country. So I see no reason why this cannot be done. So again, unless we see a new administration that is going to be changing the trajectory of monetary policy in Nigeria, I think digital is now the way, and it has to be embraced, by businesses for you to survive in this environment. And now let's talk now.
Hi, hello.
Hi.
So just before we proceed, we have some comments, and in a bit to make it more engaging so that you can hit some critical points as soon as the questions are coming. We just thought to read out, some of them so you can, just touch on some points. So we have a question, from Okechukwu. I can't see the full. Sorry. It says, from your view as an economist, what exactly is the economics behind subsidy, and what is being wrongly done by stakeholders that make it seem like a scam? And what ways can it be implemented for Nigeria to maximize the benefits of this strategy? You mentioned the fact that it will be removed, but what implications does that portend for Nigerians, in the long and short term? We also have another comment that says that you should also factor in the impact of the Dangote and refinery coming on stream. It's something that was, just launched some days ago. So can you just briefly mention its impact on the broader how it affects our customers, how it affects us personally. There's also another comment that that says, with the gloomy economic prospects for 2023, which industries that, in your opinion, which industries will be seriously affected and which ones will be relatively safer for investments? That is from Abdullahi Bawa of Development and Nexus, BDSP. So you can just take those comments for now, and then, we'll go to the next set of questions. Thank you very much.
All right, thank you. I hope I'm able to answer this subsidy question succinctly, because everyone that you meet these days, they want to hear the story behind subsidy and what the government can do. Again, I've given you a lot of numbers on how it's a no-brainer anymore for Nigerian government to continue to subsidize fuel. And again, when people criticize the government, I think that maybe we need to give them some sort of break. Maybe there's some sort of explanation to why they are subsidizing fuel. And I'll give you one simple example. Now, if you import fuel in the country, if you're a fuel importer, for instance, most of the time when the fuel is coming into the country, forget subsidy. When the fuel is coming into the country, it comes through coastal area of the Federation, most of the time Lagos State. Now, if, for instance, you're supposed to charge 300 naira per liter on fuel, right? And I stay here, my office is in Ikoyi, and I want to bring fuel from the terminal in Lagos to Ikoyi, I'll probably be spending roughly 5 naira per liter. So as a business, for me to make money, I'll be charging maybe another 5 naira or 10 naira on it. Now imagine moving the same fuel from Lagos down to Sokoto, or from Lagos, let's not go to Sokoto. Sokoto is too far. From Lagos to Ekiti, for instance, the cost of the fuel becomes a lot bigger compared to what Lagos State would pay, right? And we are in an environment, in a government where, government is actually quite sensitive. Poverty in the north, check the data, is bigger than what you have in the south, in Lagos, in Port Harcourt, or whatnot, or in Abuja, right? And so FGN is sensitive. You won't want people living in Sokoto or people living in Kaduna to be paying 800 naira per liter, whilst people living in Lagos to be paying 300 naira per liter. I guess this is one of the idea behind Petroleum Equalization Fund, just for people in the south, people across the coastal area of the Federation, to subsidize people across the remote area of the Federation. I guess this is one of the key ideas behind subsidy, and removing subsidy completely and leaving the market to dictate the price of fuel would actually not be unbalanced as far as the Federation is concerned. But that's not our problem, really, to be honest. As a business and as a capital state, it doesn't matter where you live. What matters is economic activity must go on, and Nigerian government must have enough revenues to fund critical infrastructure, to pay salaries and whatnot. That is why the opera for subsidy removal is becoming a lot bigger these days. And again, you can look around you. Fuel scarcity is the order of the day today, right? So I guess the story I just painted is one of the arguments in defense of the government, right? But it's no longer sustainable. We have nothing to do with it, and subsidy has to go. I guess that's why subsidy removal is more or less a very sensitive discussion as far as Nigeria's macro landscape is concerned. Dangote refinery is going to be the key game changer. I have a particular slide dedicated to Dangote, and I will expatiate on it as the presentation goes further. But I think this year, the difference between 2023 and the previous years is that governments can now easily push the blame of higher fuel prices to a private sector, because obviously Dangote is a businessman. Dangote has people who give him money. As far as debt is concerned, they have to service their loans that they used to build the refinery. He has equity investors as well. These guys, they are not charity. They have to make money, right? So rather than saying FGN is taking out subsidy, FGN can potentially push the blame towards Dangote, and Dangote would wield, the blame for the government. So that's one of the key easy solutions to subsidy removal this year, because Dangote alone, I mean, the refinery is huge enough to supply the domestic market. So once it comes on board and governments, remove subsidy, I think everyone would be happy. No, everyone would not be happy, obviously, in the short term, but in the long term, it's actually quite good, for Nigeria's, populace. In terms of investments, I don't know the kind of investment you're talking about, but if it is, you want to put money in equities, the kind of sector that I like at the moment is telecommunications sector. I love the sector a lot. MTN and Airtel, they are currently the biggest player in the telecommunication industry in Nigeria. Airtel alone, for instance, 50% of their EBITDA is actually coming from other African countries. So they are exposed to generating FX return. And Airtel consistently pay dividend, MTN consistently pay dividend. So these are some of the huge amount of wonderful stock that you can invest in this year. Also, the good thing about Airtel and MTN is that revenue this year is actually going to grow significantly. They've launched, they've received 5G license from the government, and data is going to be the key driver of their revenues as far as 2022 is concerned. Another key sector that I love the most is the banking sector. Nigeria's banking sector, as far as pricing is concerned, right now is actually quite cheap. It's a fantastic opportunity to enter, but if you do not want to take a risk, I would suggest that you stay with fixed income, invest in federal government bond. I mean, I've painted the story of how, again, your real return is actually going to be negative. But the good thing about fixed income is that to a large extent, I mean, your capital is guaranteed. FGN is not going to default on their Naira debt. So they will pay you back, they will pay you interest, but on a real return basis, it can be negative. Where you can get strong, solid return that is way higher than inflation is in the equities markets. I hope that does answer those questions.
Yes, please. Thank you very much. You can proceed with your presentation, and the rest of the questions will be taken after the session so that our guest, he can finish his presentation. Subsequently, an opportunity would be made. If you want to speak, you would have to raise your hand and we would unmute you, but that will be subsequently in the session. And I would like to mention that please, if we have a question, if we have a contribution, please drop it on the Q&A tab as opposed to the chat tab. That way we can all learn, we can all see it at the same time and we can all learn from the answers. So please drop your questions in the Q&A tab or your contributions. Thank you very much. You can proceed, Wahab.
Right, this year, the Naira has to be devalued, unfortunately. One of the reasons why, if you ask today, one of the reasons why CBN is not providing enough FX for businesses to bring in their raw materials is probably because of the illiquidity that we're facing in the market. And the illiquidity is caused by one key factor. The Naira is mispriced, right? Parallel market rate and official market rate, the spread between the two is about 70%. And most of the monies outside of the fact that crude oil revenue is coming down, most of the monies that typically support FX liquidity is from remittances. Remittances in Nigeria is about $20 billion today. And so those monies are usually not coming through the CBN window because no one wants to change their FX. And you are coming from the UK, for instance, no one wants to change their FX at 460. It doesn't make any sense. I would rather take it to the parallel market and get 750, 760 and whatnot. So I think the major repair that the CBN needs to do this year is to reprice the Naira towards the fair value. I don't think the Naira should be valued at 750. I think at 750, the Naira is actually undervalued, right? I think that irrespective of the valuation metrics that you use, whether it is via inflation differential or interest rate differential, which in economics we call purchasing power parity model, or uncovered interest rate parity model, or deviation from 20-year mean model, right? The most important thing is that on average, Naira should be ranging around 620 to 660 levels, depending on the valuation metrics you use. So what we're saying is that the CBN just basically need to bring the value of the Naira towards this level. Once we see Naira at this level, I think liquidity will return in the market. I mean, people will be a lot more comfortable to bring in their currency into the market. And so once you start to see liquidity flowing back into the FX window, I mean, that gap between these two official and the parallel market to start to thin out, right? I guess this is the way to go for the CBN as far as repairing Naira is concerned. So that's why I tag this year as the year of capitulation. The CBN has to give up in defending the currency at the official markets or official window of 460. They need to throw in the towel for liquidity to return in the markets. Away from currency, from monetary policy, let's talk fiscal policy. I mean, this slide is quite intimidating, but it's actually very easy to internalize. That there's not a lot of things here to see. So first is that, I mean, you're already aware FGN's budget for 2023 is about 21 trillion. And so they are looking to raise in about 10.5 trillion in revenues. That leaves deficits to about 11.34 trillion. But one of the key takeaways I want to take out from this place is that FGN would borrow a total of 10.78 trillion. This is historic in the history of the country. And at least 70% of the borrowing, 70 to 80% of the borrowing is actually going to be done in the domestic market. And I want to tie this 7 trillion domestic borrowing that FGN wants to do to what the monetary policy side of things has been doing, right? This 7 trillion is actually alarming. Is a lot. And I'll show you why it is a lot. If you want to borrow 7 trillion in the domestic market, it means that potentially on a monthly basis, you would have to borrow about 700 billion monthly. And when you borrow 700 million monthly versus what you did last year, on average, about 180 billion, that's what? Up to 6 times higher than what they did last year. That's what they are going to be borrowing this year. And this last year that they are doing 180 billion, yields were going up because even this 180 billion was a lot. Now, you're not saying that you want to borrow up to 5 times of what you did last year. I mean, the market is actually going to be incredibly nice to see how the CBN is actually going to, I mean, how the government is actually going to be doing this amount of borrowing. And you remember one of the basic economics that we learned, I think from year 1, is that once government is borrowing aggressively, what it does is that it crowds out private investment. So the meaning of crowding out private investment is that if you are saying that you want to borrow 700 billion, it means that you are going to be borrowing this money at a ridiculously amount of elevated rates, because the people that will give you this money is pension funds, insurance business. The total size of pension assets in Nigeria today is about 14 trillion. And now you want to borrow 7 trillion out of 14 trillion. That's about half of the entire total asset under management of pension industry. So if you're asking pension fund manager to bring half of their fund in 1 year, you would have to pay through your nose in terms of cost to get this amount of money. So what this just basically means is that, look, if FGN is paying ridiculous amount of money as far as rate is concerned, let's say government is borrowing at 18, 19, 20%, it means you as a private sector, you'll probably be borrowing about 2 times more expensive, depending on who you ask, right? So I think that is one of the major takeaways I want to take out of this particular slide. And if FGN actually did borrow 10.78 trillion in 2023, in addition to that 22 trillion that we discussed at the start of this presentation, then our total debt stock is actually going to be growing about 2 times more compared to what we had in 2022. In 2022, I mean, at the moment, our debt stock is about 44 trillion, and we're talking about up to 83 trillion total debt stock in the country. I am not worried. I don't think Nigeria is going to default on the debt. Nigeria is not Ghana. I think we are better than Ghana fiscal policy. I mean, fiscal wise, we're way better than Ghana. And I'll tell you why. I think the only reason why we're better than Ghana is that 60% of this 44 trillion is actually domestic borrowing. They are pure Naira borrowing. Only 40% of this is dollar borrowing. And I don't think we need to worry, all right? I've checked our maturity profile as far as dollar borrowing is concerned. I don't think we have anything to worry about. Only $500 billion is going to mature this year that the government needs to pay back. And that's not a problem. Nigeria can pay $500 billion Next year, no single amount of money is coming in as far as maturity is concerned. In 2025 and beyond, we're going to be seeing about 1.5 trillion. I mean, $1.5 billion, $1.5 billion on a yearly basis, which I think the Nigerian government can actually pay back. But what we're saying is that this debt we have to slow down the debt. The fact that we don't have problem with the structure of the debt does not mean that it is a good thing to do, because obviously we are still having revenues challenges. Once you solve the issue of revenue, then debt will stop being a problem, right? Because again, Nigeria's debt to GDP is quite low. I know. People might say that no, that's not a good metric to look at debt. Yeah, I agree. Nigeria's debt to revenue ratio is about what 90%, which is quite ridiculous. That's what I'm saying. The problem is actually not the debt. The problem is actually revenues. Once we start to grow revenue in a sustainable manner, in an aggressive manner, I think that mathematically that debt to revenue ratio should actually come down easily, no issue. But the key takeaway here is that if MPC is raising rates and government is also borrowing aggressively, it means that rates this year is actually going to be elevated, no doubt, right? So if you're a business, again, let me re-emphasize, you have to borrow. You have to borrow now. And you should not lock in your borrowing for 5-10 years. I mean, you can do 1 year mature, take another borrowing, because by the end of next year, by the end of 2024, we should start to see interest rate in the environment, basically moderating. Now, I said something about how we have revenue problem in Nigeria, and someone asked the question around Dangote refinery. And I think that Dangote refinery can potentially solve 3 key problems for Nigeria, and I'll list them before I go into the slide. One is that Dangote refinery is big enough to supply Nigeria's domestic need for petrol. Our current consumption for petrol is about 92.7 million liters per day. Dangote refinery can produce or process up to 120 million liters per day, which is more than what we consume in the markets, right? So this queue that you're seeing, this question of fuel is not enough to go around, is obviously because of the fact that Dangote has not actually started production. The refinery is done, all the mechanics is done, liquid has been introduced, they should start production in January, and so by the end of the year, we should start to see huge amount of white products coming in from Dangote refinery. So what we're saying is that Dangote refinery will first of all solve our domestic challenge of fuel scarcity. Number 2 is that Dangote refinery can potentially solve our FX problem, and I'll tell you why. If you check our import bill today, as of 2022, 60% of our import bill is actually via petrol importation. Petrol alone, 60%. Now imagine we don't have to import 60% of that. We don't have to import petrol anymore. It means that potentially the amount of money that we spend importing PMF would actually stay in this country, meaning that liquidity can potentially return into the FX market once the Dangote refinery start to hit utilization rate of 50 to 70%. And finally, as far as problem solving is concerned for the refinery, is fiscal structure of Nigeria. I showed you one data at the start of this presentation that if Nigerian government continue to fund subsidy between now and the rest of the year, 95% of our revenues is going to go into subsidy payment. Now imagine we don't have to pay subsidy anymore because of Dangote refinery. It means that 95% that should have gone into subsidy can potentially be used to funding critical infrastructure that will benefit domestic businesses in this country. And let me show you numbers, right? Typically in any given year, Nigerian government typically has a domestic crude budget or earmark of about 445,000 barrels per day of crude oil that is supposed to be consumed domestically. So what we do currently with this crude oil is that we export it, we exchange it for finished product. In economic terms or in professional terms, they call it direct sales, direct purchases. Now, once the government bring in finished products using this 445,000 barrels per day crude, they will sell it, to oil marketers. They can sell via NNPC, and they will make a naira revenue of about 2.4 trillion last year. So what if they sell this 445,000 barrels per day to Dangote, and you assume an oil price of $100 per barrel? I mean, potentially, we can potentially grow the Naira revenue from this domestic crude by about 3 times, from 2.4 trillion to about 6.8 trillion Naira. And this money is actually going to be purely FX, because obviously when you sell to Dangote, you are going to be selling in dollars, so you make FX. So again, this is actually, quite instructive when you think about it from revenue point of view for Nigeria, as far as fiscal operation is concerned. And when people say, once upon a time, removing subsidy is very hard, it's quite sensitive. But today, people would rather pay a lot more for fuel than queuing for hours in front of filling station. And if you come to think about it already, sir, I think we're already paying a lot more compared to regulated pump price on average, at least since around mid 2022. 2020, during that pandemic period, right? So on average, Nigerians are paying a lot more already for fuel. I think it's in Lagos, Abuja, and in Port Harcourt that you see major petrol companies charging regulated price. But if you move towards, the remote area of the federation, go to, I like Sokoto a lot because that's the only northern state that comes to my head every time I speak. So go to Sokoto, for instance, people are paying a lot more for fuel, right, versus what we pay here in Lagos. So all you just need to do is to announce that, look, subsidy is gone, everybody is happy because the fuel will be there. You don't have to queue for hours before you get the petrol, right? And FGN is aware of this problem. They are seeing that there's scarcity. They are seeing that a lot of Nigerians are suffering. So what they've done is that they took a bold move last week. They raised fuel price from 169 naira to 185 naira per liter. But the question, the table here just basically answered the question of the fact that, look, that 185 naira price that they are charging today is actually not enough. Because at 185, Nigerian government can still potentially pay up to about 5.1 trillion in subsidy payment in 1 year alone. If you assume exchange rate of 750 naira to $1, it means that subsidy can potentially rise to about 11 trillion in 1 year, which at this point is quite ridiculous. Another thing that this regulated fuel price is doing is that at 200 naira per liter on average in Nigeria, this price is actually creating what I call excellent arbitrage opportunity for anyone who has the opportunity to buy from NNPC and smuggle it across neighboring West African countries. Because look at it, Cameroon alone pays about 2.5 times more compared to what we pay in Nigeria, right? Niger Republic pay up to 3.5 times more than what we pay in Nigeria. So this is where, this arbitrage opportunity exists, excellent ones, right? Imagine a business, a sugar miller or a sugar refiner or a flour miller, a flour mills, for instance. Let's use flour mills. Flour mills takes cash from their balance sheets. They go abroad to Brazil, bring in raw sugar into the country. You know how stressful it is to import anything into the country. You clear it at the terminal, you bring it to the country, you refine it, you sell it, whether it is via B2B or B2C. And at the end of the day, you make just 8% margin. Now imagine you're a fuel smuggler, right? If you can smuggle fuel, you can potentially make up to 100% margin just by smuggling, who would you rather be, a flour mills or a fuel smuggler? So what we're saying here is that once FGN removes subsidy, Nigerians can potentially start to pay about 480 naira per liter on fuel. And what this does is that it sort of remove that arbitrage opportunity that we have been seeing. So this 92 million liter per day that they say we consume is actually not true. We actually think that Nigeria only consumes about 60% of this, and the balance actually being smuggled to Benin Republic, to Cameroon, and to other neighboring West African countries. And if we remove subsidy, our consumption can potentially reduce to about 51 million liters. One key game changer for this year, if Nigerian businesses should take advantage of it fully, is probably after. And I like this document a lot. When I went through it, because I feel like after is quite important, because in my own opinion, trade integration in Africa is probably one of the key game changer for Africa's quest to industrialize, right? If you've done business before in this country, you try to bring in anything from Benin Republic, you would agree with me that it is incredibly difficult. It's incredibly difficult. you pay different kind of taxes, whether from Benin Republic government, for Nigerian government. So there's this not nice regulatory impediment that is not allowing African governments to do businesses with each other. And that is exactly what AFTA is trying to do, or is trying to solve. That's the problem AFTA is trying to solve. And I feel like AFTA is important because look at it. Africa's intra-regional export is only 16% of total export, which is quite ridiculously low when you compare to an America, Asia, or Europe, across other major continents, right? We trade among ourselves. The trade among ourselves is quite low, just about 16%. And what we think is that if AFTA should be fully implemented by 2035, our intra-regional export as a percentage of total export can actually reach up to 60% upon fully utilization of the AFTA, right? And based on what World Bank has written in the past, what they said is that by 2035 as well, the income that will be gained from this AFTA can potentially rise up to $450 billion by 2035, which is extremely useful. Now, as far as we are concerned, we think Nigerian businesses can actually benefit from this AFTA in a number of ways. Today, if you are doing businesses in Kaduna, your market is probably major commercial hubs of the Federation. Your market is probably in Abuja. Your market is in Port Harcourt. Your market is in Lagos. But today, your market can potentially be in Abidjan. Your market can potentially be in Dakar. You have excellent opportunity to access other regional markets, right? You don't have to limit yourself anymore to Nigeria alone. You can potentially grow your revenue significantly. You compete with businesses in South Africa, right? Just basically from utilizing fully the AFTA that has been signed about 2 years ago. Beyond that, you also have access to cheaper materials. I was sitting down with the CEO of Boa Cement, and one of the key things I got from him was that, look, Boa can send clinker from Nigeria to Burkina Faso cheaper than anywhere in the world. From Nigeria to Burkina Faso, cheaper than anywhere in the world. But guess what? Burkina Faso would rather import clinker from China because, obviously it's easier for them to bring in clinker from China down to Burkina Faso rather than from Nigeria, right? So what we're doing here is that once AFTA is fully utilized, rather than go to China to go and spend 2 to 3 times more, you can obviously come to Nigeria where we have massive amount of limestone in deposits, and we also have huge amount of quality companies that is taking out those limestone and they are turning it into clinker, exports, right? Access to talent, brain drain in Nigeria is actually the key discussion today, but you don't have to worry about that no more. You can easily advertise your openings in Accra, so you can easily employ people from Ghana, employ solid people from Nairobi, solid people from Rwanda, not just in Nigeria alone. Obviously, you can think about the implication for Nigerian, employees themselves. We too would have to compete with solid people from all those, heavyweight African countries. Wider, financial opportunities. This is another key benefit of AFTA. If you take your business proposition to an AFC or a bank of industry and it's not good enough, you can potentially go to other African countries to get financing for your product, depending on who see value in your business. You have access to technology, and you also have access to borderless payments. This is not obviously exhaustive. You can think of potential huge amount of opportunities that this AFTA can do for your business, right? But for you to fully benefit from it, I guess you'd have to understand the law. I can only point towards how you can benefit from it economic-wise, but legal point of view, you would have to seek, advice from your lawyer, obviously. Answering the question of where opportunities are this year, I've divided it into five key sectors. Number one is that the financial services. Now, I believe there is massive amount of opportunities in the finance services. I always tell people that banking sector is already saturated. You can't do nothing about that. You can't compete with Access. You can't compete with a UBA. You can't compete with a GT Bank, but you can do something different from what they are doing. And fintech is one of the biggest opportunities in Nigeria today. I've overstressed how the next phase of growth for Nigerian business is actually embracing a digital platform. And this is where, fintechs, opportunity exists. I don't think that Nigeria is already fully served as far as fintech is concerned. I think that 2023 and beyond is the year of financial technology. And if you have the capacity, that is where opportunities lie. Consumer goods, I think this year, Nigeria's macro will recover. And so spending would be a lot stronger compared to what we saw last year. So I think, you remember how I was saying that, look, for you to grow margin, you have to raise price by about at least 30%, right? I think this year you can potentially do it easily without necessarily hurting your volumes. I mean, just gradually not hit your customers in the face with aggressive price hike. Gradually, I think you can do it. And opportunities exist as far as consumer goods is concerned, whether it is via staple goods or via durable consumer goods. Here, possess some sort of massive amount of opportunity. Construction, I mean, I've already overemphasized, overflogged infrastructure opportunities in Nigeria. CapEx for 2023 is about 30% of the budget. Government is quite aggressive, especially the Buhari government, quite aggressive as far as investing in infrastructure is concerned. This is where opportunities are for business. Renewable, I mean, you would agree with me that dirty fuel is already becoming a story, right? Globally, everyone is talking about greener energy, greener climates, and I guess this is where opportunities are. And FGN is also aware of this. They are investing heavily as far as renewable is concerned, and they've also introduced some sort of varying fiscal incentive, for people to have the opportunity to bring in equipment for renewable. Because I mean, up to 80% of Nigerians still, rely on the national grid, and I don't think that should be the case. I think people should have alternative to this incessant collapse of, grid that we're facing in the country today, right? Bank of Industry, IFC, I know I've had varying amount of programs that they are using to support, people who are investing in, infrastructure. I mean, renewables. All of these 4 key sectors are obviously going to be riding on ICT. Clearly, ICT also possesses massive amount of opportunity. Internet users in Nigeria is growing aggressively. Data usage. I mean, today, if you recharge 6 gig on MTN, before you know it, it's already finished. You have to buy another one. You have no choice because you have to use your Instagram to push your businesses and whatnot. All right. This is where, I feel opportunities exist. How should you protect your cash this year? I know a lot of businesses typically have massive amount of cash, and you know how we've said a lot of things about how the government will definitely devalue the naira this year. So for you to protect yourself, there are 4 key different ways that you can do it. First is, and the easiest, is the dollar mutual fund, and we have that here in our company. You can invest in some dollar mutual fund with excellent return. And the good thing about this dollar mutual fund is that potentially you can protect your cash. You don't have to worry about cash preservation or capital preservation, because they invest in safer instrument. But US dollar offshore equities, massive amount of risk. In fact, I wouldn't even advise you to put your money here unless you have excellent expertise to navigate the market, because the market is extremely volatile and is highly efficient. So, but if you have the skill, I mean, US dollar offshore equities is one of the best ways to keep your cash this year. I mean, you can think about a Netflix, an Alphabet, a Facebook, where you can invest your naira, change it to dollar, and then obviously at the end of the day, when devaluation happens, you are clearly fully protected. Another opportunity is via listed stock in Nigeria with excellent correlation with dollars. I mentioned how 50% of Airtel EBITDA is actually being generated from other African markets. Excellent, dollar revenues for Airtel. Okomo, about 15% of Okomo's revenue is via it's from dollars, obviously, because Okomo sells rubber to the export markets. Presco, same can be said. So all of these companies typically always benefit when dollar devalue in the country. So when you invest in this naira asset, you can potentially be edged against movements in currencies. Finally, is durable goods. I think Nigeria is the only country where you can buy a car, use it for 5 years, and still sell it for a much higher price than what you bought it about 5 years ago, right? I wouldn't say you should buy cars and gold as a way to protect your cash, because obviously because of illiquidity issue, you may not necessarily be able to sell them as quick as possible when you need to, get liquidity. But I mean, you can look for companies whose primary activities is to produce or sell any of these durable goods or physical commodities. That way, you can potentially also protect your cash against the volatile, 2023. I'll leave it there and hand over back to Phoebe.
Wow, thank you very much, Mr. Wahab, for that amazing presentation. Even on my side, it was a period of much, of much education and, for me. So thank you very much. So for now, we'll go into the question and answer section. I don't know if, please just hold on for a minute. So I did mention that if we have any questions, we should please put it on the Q&A session in the Q&A tab. But I'll just quickly run over some of the questions that we still have in the chat box. There's a question on MPR adjustments by the CBN, on if it actually attracts FDI or if it improves investments in the economy. We also have another question about the foreign policies, or what policy is existent by the federal government to make internet banking seamless, digital banking and whatnot. There is another question that has also been answered about the removal of fuel subsidy. But I would like to ask you specifically, what is the direct impact of subsidy removal on SMEs this year, and what are the safety measures for SMEs? There's also another question, like what active steps can the Nigerian government take to encourage foreign direct investments? I think I'll be batching the questions, so I would ask you 4 at a time. You'll quickly answer, and let's just try to be time conscious and hit the nail on the head. So I've asked you a question on subsidy and what SMEs in the manufacturing sector can do to protect themselves, and how can the government practically encourage FDI? Thank you very much. And then we'll go continue from there.
Okay, I think to answer the question around how whether or not the rate hike that the CBN has been doing is attracting FDI, I don't personally think so as well. If you check the trend of the data, you will see that capital importation, whether via FDI or FPI, has been actually reducing significantly over the last couple of quarters, right? And I don't think that the problem is solely on Nigeria. I mean, almost all emerging economies and frontier economies, they are facing this huge amount of pressure, from portfolio outflows. And the reason is very simple. If you were following my presentation, I mentioned how the US government the US Fed is actually raising rates aggressively. They did almost 400 basis points, more than 400 basis point rate hike last year. So the implication of that is that it's making investments in the developed markets, such as US, to be a lot more attractive than what we're seeing in Nigeria. I guess that's why we've not been seeing the impact. But the fact that we're not seeing the impact does not necessarily mean that the CBN should not raise rates, right? At least if any investor want to consider emerging and frontier market, let them look at you, let them see that your rate is quite attractive, so that they will come, as far as FPI is concerned. But FDI, I love FDI a lot. It's a much more patient capital, right? It's a much patient capital. FDI stays for 5-10 years before you see FDI exiting the economy, right? So, and I think what FDI can do is to strengthen rule of law and to respect rule of law. In the last few years, I mean, I've seen a lot of business, how do I call it? A lot of volatility as far as businesses operation is concerned. I mean, you remember Go-Kada, for instance, before they came to Nigeria, they sat down with Lagos State government, explain what their objective is, what their goal is, and Lagos State government gave them the assurance that, look, your goal is quite in tandem with what our 5-year, 10-year plan too is. And then they started investing in Africa. All of a sudden, they just woke up one day and banned bikes across, Lagos State. I think this sort of news are not really good when other FDIs, share them. So I think the government needs to do a lot better in respecting laws. Once people become a lot more comfortable regarding what FGN is saying and their action, I guess we'll start to see flow of FDI, coming into the economy, right? In terms of enabling digital adoption, FGN has done quite a number of good work. Last year, they've given 5G licenses to MTN, Airtel, MTN and Mafab. And yeah, I mean, the three of them actually, MTN, Airtel, and Mafab has 5G licenses now, so they want to deploy it, right? And they've also given MoMo licenses to all these telcos, right? Because come to think about it, telco actually covers up to 70 to 80% of the entire federation, but the banking system only cover about 30% of the federation. So FGN also have realized that, look, telco can reach the unbanked population faster than the banking sector. I guess that's why they're also speeding the pace at which they are issuing licenses. So Momo is going to be a thing in Nigeria today. I mean, it's been a thing in East Africa in the last couple of years. I mean, I've been to Kenya and Rwanda. I've seen that, look, the entire Rwanda, Kigali, not entire Rwanda, I was in Kigali, so the entire Kigali, they were all talking about Momo. So I guess today in Africa too, in Nigeria too, we'll start to embrace, Momo as well. Subsidy removal is going to be, the short-term implication is quite bad for businesses. I mean, I wouldn't sugarcoat it. Cost of doing business is going to be a lot higher. The reason is very simple, because, I mean, price of petrol is actually quite sensitive in Nigeria, in the sense that it connects to virtually everything: transportation, communication, even MTN. For them to power their data service engine room, I mean, they need massive amount of power to do so, and how power is epileptic in Nigeria. So some of them would have to rely on diesel and PMS to also power their fuel as well. Aviation fuel, very incredible. So once the price of these things start to go up, cost of doing business become elevated. So I guess it's going to be a challenging year. I wouldn't say otherwise. But one of the best ways to reduce the pressure on your books is to gradually raise price. I know not everybody can raise price. I mean, this raising price of a thing depends on the elasticity of demand of your product, right? But if you can do it, even if to shift 50% of the cost towards the final consumer, you should do it. I guess that's how you can protect your books from the impact of this huge amount of costs that we're going to be facing over the next couple of quarters.
Thank you so much. So if you're an SME here, essentially brace up, tough times are coming, but we will definitely see this period through. There is a comment from Gada Lawal. He says, I think the country is working at cross purposes, in the sense that on one hand, we're talking about import substitution, and on the other hand, we are increasing interest rates, thereby making our local production uncompetitive against, say, China's products, who assess funds at very low single-digit interest rate of 3.65% per annum. Also, our unreliable power supply, coupled with high diesel prices, are going to have negative consequences on local production and, by extension, import substitution in Nigeria. Thank you very much, sir, for that comment. Now we will proceed into the questions. We have quite a number of questions. So my apologies if your question is not directly read out. We would address questions based on a thematic form. So if it's a question on subsidy, if it's a question on whatever it is, if it has already been answered before, my apologies, but your question will not be literally read out. We've answered the question on active steps to encourage foreign direct investment. We have a question from Okonlawo Festus. He said, how does inflation affect our loans? Another question, we have another question from Ugochinyere Paulson HMD. She says that digitization is the way to go, but there are challenges that need to be addressed, such as network issues and the resolution of dispute errors, such as the number of days of resolution by banks. How does Kenya handle this? And this might give us an insight of the way forward and also win more people to adopt digitalization. The third question we will take at once will be from Oluwaseun Akeredolu. He says, I seek your advice on investments in real estate compared to communication or banking sector. I think I would like to have the liberty to answer that on this call. We will not give investment advice. Please consult your financial advisors to give you specific investment advice. This is a macroeconomic webinar, so specific investment points such as invest in XYZ or invest in so company. My apologies, we might not be able to take that on this call. And then the last, we have one more comment, and I think we'll take these two at the same time. It relates to foreign exchange. We have an anonymous attendee that is complaining about his inability to obtain Forex for imports payables from the central bank or from the interbank exchange market, and the fact that customers they have to buy Forex from the open market to pay for their import bills. Also, the banking sector in generally, there's a lot of documentation requirements before companies can assess Forex for their importation needs, which are cumbersome, and the details are just a lot. So please just help us answer the question. So for SMEs, for companies in the industrial sector, how can they navigate the complexities of assessing foreign exchange for their transactions? Then also, you mentioned Kenya, you've been to some countries in East Africa. How do they handle this? And perhaps we can get tips for the Nigerian economy. Let's answer this batch of questions and then we'll proceed. Thank you.
Oh, so it's just all about the access to Forex. Is that the only question I have to answer?
Yes, we had a number of questions about Forex and the inability of companies in Nigeria to assess Forex on time as that when due, and in in a manner that is easy for them to meet their importation needs for that processing. So how can they handle that? How can they navigate the foreign exchange uncertainty? Especially as it affects their business operations.
To be honest, I really, really wish I had answer to how to access FX. I don't know if anyone else on the panel, I mean, perhaps BOI probably know more than I do at this point, because even me, I need FX, right? And I've not been able to access. I was in Dubai this late last year, and I mean, I couldn't even get BTA. I had to buy FX from the parallel markets, and my travel costs ended up being over 4 times of my initial budget. I'm still having to pay the BC at the moment. So perhaps if anyone is on the panel that could give a sense of how FX is being accessed in Nigeria today. I don't know. I know that a lot of people queue at the CBN window, and the last business owner I spoke to, what he said is that it takes them anywhere between average of 1 to 2 months before they are able to get FX out at the CBN official window, right? I think beyond that, I don't know any other thing outside of how people secure FX here.
Okay, thank you very much. So we have 2 people that have raised their hands up. And so that we can just quickly clear that portion for people that want to speak. I would be unmuting 2 people. The first is Ayomide or Sabia, and the second person is Agbomirele or Rukwe. Your hands are still up, so I'm going to allow you to unmute your mic. I would like you to keep your question to 30 seconds. I have asked you to unmute your mic. If you're willing to proceed, but if any other person wants to ask a question directly, please raise your hand and we'll get back to that, or we'll get back to you as quickly as possible. There's also, yes, Agbomirele or Rupe, I have asked you to unmute. Please unmute your mic and speak, or else we will proceed. Thank you very much. We'll go to the other questions that we have. Someone asked the question, very interesting, on this matter of foreign exchange. It appears that it affects a lot of our customers. And Adeleke Ajayi is asking, why is the central bank allowing the black market in the first place? Why not outlaw it completely? Another question from Flora Fabian. She's asking, what impact do you think that our weak foreign exchange earnings has on the value of the naira? This is in response to your comments about the value of the naira stabilizing at around 650 naira to the dollar if the CBN adjusts the value of the naira. So what is the correlation between our foreign exchange earnings and the value of the naira? Another person who is anonymous is asking, can the NPR adjustment by the CBN alone impact positively on FDI and local investments, just like in the USA, when you stated that the rate increase by the Federal Reserve was a factor in promoting FDI inflow to the US and the subsequent appreciation in USD against other major currencies. That is, NPR increase alone, can it really impact FDI? I think we answered it earlier, but you might just brush on it a little bit. There's another question from Yaya Megari about what the federal government is doing to improve digital banking. I think that has been answered. Fatai Adiroju is asking, kindly advise us which sectors of the business of the economy is it advisable to invest in, and what areas should we be scared of? If you have answers on that without mentioning specific companies or investment vehicles, that would be helpful. Then another person is asking about the removal of fuel subsidy and how it is going to negatively impact the common man. He's also saying that there's absolutely no guarantee that the removal will improve the lives of Nigerians. Right? So will the removal be pulled back to another sector like agriculture as it is being done in developed countries? Or, it's just one of those white elephants projects that our beloved nation is actually known for. So please, you can just try and answer this in a batch and we'll proceed to the next batch of 5 questions. Sorry, let me just add another question. My apologies. It's in relation to subsidy. And it has to do with the Dangote refinery. Can you please confirm if Dangote will buy crude oil in FX or in local currency? So we have 2 questions about that. So please just take everything at once. Thank you very much.
Yeah, so I don't, let me just provide answer to that straight up. I don't think that there is any sense in Dangote refinery buying crude oil in Naira. It doesn't make any sense at this point. They should buy it in dollars. You should buy it in dollars because some of the potential benefit I feel like Dangote refinery would deliver to Nigeria's public finances is if that domestic portion of our crude oil, that 445,000 barrels per day that I mentioned, if it is sold to Dangote and we sell it in dollars, yeah. So if Dangote refinery comes on board, FGN should completely remove their hands from the downstream sector. It should be completely, deregulated. Let the market dictate, the price. Because if you don't do that, then the Dangote refinery itself may not necessarily solve, Nigeria's current issue, right? For us to get full benefit of it, subsidy has to go, and the sector has to be completely deregulated. So NPR in itself cannot really attract FDI. I completely agree with that comment, to be honest. I made a comment around how policy rate changes in the US and in the UK, has almost immediate impact across, macro landscape in those countries. But for Nigeria, that's not the case. And the CBN is also aware. The CBN is not foolish. They are aware. They know what they are doing. Trust me. And one of the reasons why I feel like they are aware is that beyond all this NPR that you see, CBN has varying amount of interventions that they do, right? So there are some key sectors that are strategic to the CBN and that the CBN provides single-digit rates to those sectors. Agri sector, for instance, they have access to CBN's intervention loan. I can't remember the name of it now. So, but I mentioned it earlier too as well that they've raised the rates on that loan from 5% to 9%. And beyond that, beyond what CBN is doing, there are other government agencies that are also heavily involved in giving concessionary loans to strategic businesses. So if you operate in those sort of areas, that's where what you do. That's where you operate. I think all you just need to do is to ask questions. Do research. Where can you? Because information is quite key. Where some of your competitors are getting low single-digit loan, you will now be getting at the commercial rate Banks today, if you meet them, you have a books, you have a good business and you want to take loan from bank, I don't think anyone will charge you anything less than 30% commercial bank. But you can obviously get concessionary loan of as low as 9%, 8%, from the CBN. So that's why beyond all these monetary policy issues that the CBN tried to highlight, which basically is targeted towards the private sector, CBN also have their own specific interventions that they do, which I feel like that's where key economic growth is actually embedded, right? I mean, check agreed GDP, for instance. Over the last, 10, 15 quarters, agreed GDP had never, returned negative growth before. And this is purely because of what the CBN is actually doing in that, particular sector. So again, to answer the question, I don't think MPR alone can do it, but the CBN is actually doing a lot more things to actually support economic growth. What else have I not answered? I think it's subsidy question, right, Phoebe?
Yes, we had some questions on subsidy, as well as there's this important one by Adeleke Ajayi. Why is the CBN allowing the black market in the first place? Why not just outlaw it completely?
Outlaw. Even if you outlaw the market, the market is outlawed. Let's be clear. It's illegal. If the CBN should see you buying FX on the streets, you're probably in trouble, right? You remember in 2015, 2016-ish, one of the things that the CBN typically like to do then to manage FX is to arrest, the bureau de change operators that are selling way higher than their regulated price, right? So it's currently illegal. It's not like it's not illegal, right? But the only reason why the CBN has been quiet is that they know in their church mind that, look, they can't supply the markets. They can't obviously give everybody that needs the dollar. That's why they say, wherever you want to buy your dollar, go and get it. We don't care. But what we know is that we can't give everybody, right? If you want to travel, you want to go to the US for holiday, it should be at your cost. You want to, even me, I'm subscribing to this sort of rule. You want to send your kids abroad. I'm sorry for people who have kids abroad, but if you want to do it, you should not be getting the money from the CBN. You should be getting it from the parallel market. It means that you have enough money to do so, right? Again, if you do that, I think that can potentially also grow Nigeria's education sector, right? Rather than taking your children to the UK to go to school. Covenant, excellent universities, and other excellent universities across.
Hello.
Yeah. Someone is saying something.
You may go ahead. You may go ahead.
Oh, okay. I think that sort of answered that question.
Okay. Thank you very much. For the people that raised their hand, we'll start with Agbomiere or Orikoye once again. You have been unmuted, so please ask your question. In the alternative, yes, please go ahead and just quickly ask your question.
Hello.
Hello. Good afternoon, sir.
I can hear you. Good afternoon.
I can hear you.
My question is on the issue of Dangote in the production of fuel and all other.
Good morning.
I'm not even here.
I think we are muted a number of people. So let's mute the
Hello,
other guy.
good morning.
Gentleman speaking only.
Yes, Mr. Orikoye, you can proceed about Dangote refinery. Yes.
Yeah. I think comparing Dangote refinery coming into play right now, comparing them with the old system of subsidy should not even be considered at all, because in economics, we know that nearness to raw material is good enough for good production and less cost of prices. So if we are doing probability on the fact that Dangote may come up with 400 naira per liter, is a problem. I'm a client to Bank of Industry already. I'm having problem with the issue of diesel. Diesel has run me out of the market, and I'm having problem with my production. So what are we talking about?
I'm so sorry to hear that. I really am sorry, but that's the reality. The reality is that we've plugged the number. It's not like we assumed petrol price would be anywhere between 300 to 400 naira per liter. It's not like we assumed it. We plugged the number and we saw that that's actually where the price should be if FGN should completely eliminate subsidy, right? And that's the reality. There's no two way around it. Dangote refinery will come. I mean, I mentioned it clearly earlier that look, Dangote is the face behind the refinery, but Dangote has debtors, right? He has equity investors as well, and he has to pay these guys back, right? And so because of that, I don't think he's into a charity business. He would have to charge prices that would make his business profitable, and anyone doing business in Nigeria would also want to do that. I think that we just have to start to live with the reality and start to build those things into the price that we charge to our businesses. When I was talking to one of the CEOs of a major airlines, operators in Nigeria, what they told me is that when I was asking them that, look, why is the tickets to London becoming 1 million, 1.5 billion, where 3 to 4 years ago it was just 300,000 naira? What they told me is that, look, they are already assuming that naira exchange rate is 1,000 naira to $1. That's their assumption. That's how they are pricing their airline ticket now, such that when they want to take their money out of Nigeria, they will take it easily from anywhere at whatever rate they get, because they're already billing it into their price, right? I think finding a way to marry this thing into the price that you charge your client is very imperative for you to survive in this kind of economy. And you have to prepare for a 400 naira, 500 naira liter for fuel price per liter in this country, whether this year, whether next year, whether in the next 5 years, it will happen eventually.
Okay. Thank you very much for answering that question. I have an interesting comment that I saw on the chat from Mr Mustapha, and he's saying, how will the consumers protect themselves if producers and service providers push their costs to the consumers? I find that interesting. Then there's another comment I must not miss from Mr. Taiwo Atoki. He says, how can we be sure that the savings from subsidy will be available for other sectors? If we are borrowing 10 trillion naira, savings from subsidy will only be used to reduce borrowings, and the subsidy removal savings will just be a mirage. Another person, Samuel Ugohaga, is saying inflation is really affecting our business like poultry. What can we do about that? Then another question, similar to the one about our projected borrowing. We have a question from Subai Rasaki, and the question is, the 10.74 trillion naira projected borrowing is obviously not good for our economy. But my concerns are, we have respectable economic experts that work and economic projections and analysis and advise the government. So, I think this person is just trying to ask that, what is happening? Our economic experts, everybody, what is happening in that area? So I think maybe just answer some of these questions. As a consumer, everyone is increasing their price. How do you manage that? I have a poultry business, for instance. How do
I have all the questions, Phoebe. Thank you so much. I know I've been missing all your questions, but this time around, I'm writing it down. I have all the questions. Thank you so much. How do you protect yourself as a consumer? Grow your income. That's the only way. I'm so sorry, man. That's the only way. There's no other way. You have to grow your income. If your company is not willing to raise your salary, leave and go and join somewhere else. Other companies, right? I think that's the best way. And to be honest, a lot of companies are already aware of the challenges that their employees are facing. So some way, somehow, some companies even have a thing that they call inflation adjustment, which every year they give them 15 to 20% salary increase just for them to manage, the inflation. But the simple answer to that question is that your income has to grow faster than inflation to survive in this, economy. Of course, I totally agree with the fact that savings from subsidy may not totally utilize in this country. I know that one of the challenges that we have in the past with subsidy removal is also trust, from the government. People don't trust the government. And when back in 2012, when Jonathan tried to remove subsidy, January 1st of January, I was still, I remember that hell almost broke loose in the country. And one of the reasons a lot of people were agitating at the time was that people will steal the savings that they say they want to save from petrol subsidy. That's why there was a lot of protest at the time, right? But I think we have no choice. We just have to trust the government, irrespective of what comes in next year. I mean, I don't know who. I've listed some of the key priorities that I think that they need to focus on. And if that is done, we can, I mean, sustainably grow this economy sustainably, right? But the most important thing is that we are not the government. We don't know if they will do it or not, but let them remove it. Once you don't utilize the subsidy removal, then we can ask questions that, look, this amount of money that you've been saving over the last couple of years, what have you done with it, right? So, I mean, we can hold people responsible for that, for subsidy savings. Inflation on businesses, on poultry, again, just as your employees are asking you for more money as far as wage is concerned, you should also ask your clients for much more when you sell your products. I know this may be quite very insensitive for me to say, because I'm saying it as though that's how easy it is to raise prices. But I mean, we are in a period where we have no choice. For people to survive, you have to take some of the harshest decisions, to ensure that your business, survive in this sort of environment. And that harsh decision is for you to, raise your prices aggressively to be able to protect your business. Yeah, so finally, I also want to mention that I don't think borrowing is that bad. I mean, all economists, on this call will probably agree with me that borrowing is actually not the problem. And I also said that the structure of Nigerian borrowing is actually not quite, a challenge for me personally yet, right? I think we still have a lot more room to borrow. But the key question is, what are we borrowing for? If we can see tangible infrastructure that we're using the borrowing to do, that would, had some sort of multiplier effects on Nigeria's retained revenue, then we can say that yes, borrowing is good. I mean, today we find ourselves in an economic problem, in a lot of challenges. I mentioned also that infrastructure deficit in Nigeria is about $3 trillion. We need to fund that stuff. We need to find a way to fund it, whether it is via growing revenue or via borrowing. But we just have to
send me 1 gig.
We just have to ensure that we are judiciously utilizing the monies that we're borrowing. Thank you, Phoebe. You can take it from here.
Okay. Thank you very much. Thank you very much, Wahab. We have some other questions still around the Dangote refinery. So there's someone asking, do you anticipate that anything, whether economies of scale, absence of shipping and other costs, what could possibly result in a decline in oil prices at the pump? We're saying there's going to be subsidy, prices are going to go up. But he's just asking hypothetically, what can actually happen, to bring the prices down. We also have another question from Abdullahi Ali Gaidam. He's asking that why is it that many economists do not reflect climate situation in their projections? And do you have any views on what the impact of climate change will have on the Nigerian economy? Right? That's question number 2. Question number 3 will be from Tim Peterson. What is your view on investment in the solid mineral sector? Then question 4 will be from Sunday Oshunbadegun. He says, what is our government and the private sector doing specifically about creating shipping and maritime services within the West African coast to allow for exports and imports? I would also like to mention it again that if you have a question, please put it in the question and answer section so that we can track how we are answering. Thank you very much.
I like the first question a lot, Phoebe, because I think the person that asked the question actually is savvy to some extent, and I like how you are thinking, because obviously, I mean, someone also mentioned on this call too earlier that the refinery that we're getting petrol from is now a lot closer towards that than what we used to have in the past, where you bring it from abroad, right? And ideally, technically, the fact that Dangote refinery now is now here in Nigeria, we should be able to save a lot of costs from freight and other, costs that is embedded in shipping, products from abroad to Nigeria. But sorry to disappoint you, that cost that I just mentioned is only just roughly around 10% of the entire cost, just 10%. The key driver of petrol price are two things. Number one, crude oil price. Number two, exchange rate. As long as crude oil price is at this level, $90, $100 per barrel, and exchange rate is at 450, 460, going up to 600, we are going to be having a lot of problem in the country, right? In fact, leave crude oil constant. Let's say crude oil price remain at $90 per barrel and exchange rate keep devaluing to $1,000 to $1 level. Fuel price would ordinarily be going up easily without any crude oil price impact, right? So I think the key takeaway that I need you to take away is that the major driver of fuel price in Nigeria is just crude oil and exchange rates. And if you cast your mind back to around June 2020, when COVID-19 happened, one of the key fiscal policy relief that the FGN did was to reduce fuel price. They reduced fuel price at that time from 145 to about 120, 110-ish, right? And that time, it's not like because that reduction in fuel price was not because the government is generous. It was because crude oil price was less than $30, $40 a barrel, right? So once crude oil price goes significantly down, fuel price can, moderate easily. But again, the implication. We also heavily rely on the price of crude. So somehow we are in a dilemma, right? But in my own opinion, and I think where you can see the positive is that once Dangote refinery comes on board, FGN deregulates the market, we won't need to pay so much money to import fuel into the country anymore. So technically or ideally, we should start to see Naira appreciating against the dollar. So even if crude oil price goes up and Naira is appreciating, let's say Naira comes down back to 400 or 360 level, 360 level, right? We can potentially see fuel price actually coming down easily without, the impact of crude oil price. I don't know if that makes any sense to you. Climate investments, to be honest, I don't think we should be discussing climate change. I know I'm not supposed to say this, but really, climate in Nigeria, where we are still facing a lot of problems. I'll give you some numbers that you can go and sleep on. Qatar today, oil price and oil production is incredibly important to them, to the extent that they've announced that in 8 to 10 years, by 2030, they want 50% of their government revenue to be coming from renewable energy. And how would they fund that renewable energy? They need crude oil production and crude oil receipts to fund that investment, right? So yes, I don't think Nigeria should be talking about climate right now. We should be exporting as much as we can, so that once we are getting monies from crude oil exports, receipt is coming in, we are taking that receipt, we are using it to invest in other sectors. Nigeria's entertainment industry is becoming one of the biggest in Africa. These are some of the places that I feel government can potentially raise huge amount of money as far as tax revenues is concerned, right? Beyond that, invest in every other sector. Talk about agriculture, talk about renewable, right? But right now, let's pump as much as we can. Let's make as much money as we can so that we're able to fund all those critical sectors, such that once issue of stranded assets starts, Nigeria would have escaped. But right now, I think we are in a very horrible position, especially now that a lot of people are talking about global warming and whatnot. But honestly, I don't think analysts should worry about climate in Nigeria yet until we get some things right. I think that's about it. As this maritime cost on government, I really don't think this is a responsibility of the government, in my own opinion. I think private sector who have the capacity to create this sort of structure, I think they should do it as well. When Dangote started exporting clinker to African, Central and East African countries, they had to build their own coast, their own export terminal, right? So I think, I mean, I'm not sure, because Dangote could do it, because Dangote is obviously one of the largest in Nigeria as far as revenue-wise is concerned. But I think this has a lot more to do with the private sector than the government. Government should not be having their hands dipped into different part of the sector. All they need to do is just give regulation that would ease, business, that would ease of doing business, such that everybody can take advantage of whatever sector that you find yourselves. So.
Okay, thank you very much, Wahab. The answers you have provided to a lot of the questions, they've been extremely insightful, and we are very honored to have you on this session. Unfortunately, we will not be able to take any more questions at this moment, out of respect for our collective time as well as the time of our guest speaker. However, a lot of the questions that we still have unanswered, we will share it with him, and whatever answers can be provided, we may circulate it alongside the the slide after the session. I would like to say thank you very much, Mr. Wahab. And just before we go, I'd like to hand over to the DH Strategy and Corporate Transformation, Mr. Yinka Adeboye, for his quick vote of thanks. Thank you very much.
Thank you very much, Phoebe, and thank you very much, Wahab. The presentation has been very, very insightful, top-notch. The delivery, the questions, the answers provided, really, really appreciate your effort in doing this for us. And just to let people know, this is a pro bono engagement, so we really appreciate you taking your time out to develop this presentation, really well developed and well presented. Thank you so much. And to also thank the over 400 people who were at this session, who logged in and stayed up until the end of the session. We sincerely appreciate you. Our customers, to our BDSPs and all other external parties who are here with us, we sincerely appreciate your time, and I'm sure you have more ammunition now to be able to face 2023 head-on and be able to succeed in whatever endeavor that you're practicing. And to our BOI staff, I sincerely appreciate you guys as well, especially our executives, top executives who are here. We have our GM SME, Dr. Risnaluddin Mohammed here, and our CFO, Mr. Akim Adeshino. We sincerely appreciate your presence. And all other colleagues of mine in Bank of Industry, we sincerely appreciate your time, and I wish you the very best. So thank you so much again, Wahab, for this very detailed and insightful presentation. We will share this with everyone. We'll also try and answer more questions, that we couldn't take because of time. Everybody needs to go back to their desk now to continue their day's job. Thank you very much. Have a good day.
Thank you very much, everyone. So honored, VOI. Thank you.
Okay, I just have one last bit of housekeeping. We launched a poll across your screen. So please, if you are yet to Okay, so thank you very much. Please just answer the poll and just wait till we end the webinar, and you'll be redirected to another link. Thank you.
Oh, Phoebe, did you say I should wait? Did you say I should wait?
No, we're speaking about, or rather, I was referring to our participants, our guests. They should answer the call, and so rather they should answer the poll. Yes, okay. So that is still ongoing now. We have about 79% participation. So fantastic. Please check the poll tab on your screen. Please check the poll tab on your screen. We have 80% participation now, which so it is actually increasing. If you're yet to answer it, please just quickly do that. I mean, it's interesting to see it move in real time. 83% answer now. IT at 90% participation, I think we can shut down. And as I mentioned earlier, you'll be redirected to a link to quickly answer something, to quickly answer a question on our customer service experience. And once again, thank you very much, Mr. Wahab. It was an absolute pleasure to have you. And thank you very much, everyone. Yeah. Bye-bye, everyone. Thanks.